Good morning, we are Group Spartans and we are about to tackle Chapter 15, Earnings per Share. Ano nga ba ang earnings per share? It's a computation made for ordinary shares. It is a form of profitability ratio which provides a measure of how much profit or loss each ordinary share has earned or incurred during the period. Dito, according to past 33, hindi lahat ng company ay required na mag-present ng EPS nila sa income statement. Ang mga required lang ay yung mga company na publicly listed at yung mga in the process of issuing ordinary shares in the market. Ano nga ba yung ordinary shares? Kagaya nga ng sinabi ko kanina, EPS is a computation made for ordinary shares. Sila yung may EPS, samantalang sa preference share naman, no EPS is computed kasi meron siyang fixed return. However, EPS may be computed for preference shares when they are also entitled to a variable return in addition to their fixed return. So meron tayong two types of earnings per share. Una na dyan yung basic earnings per share at diluted earnings per share. Dito, mag-focus muna tayo sa basic earnings per share. So paano nga ba kinukompute ang basic earnings per share? Basic earnings per share is equals to profit or loss less preferred dividends divided by weighted average number of outstanding ordinary shares. Dito, sa formula na to, makikita natin yung profit or loss na dapat na ilalagay natin ay yung net income after tax. Bakit? Kasi ang profit or loss is the net of income tax expense. So kapag before tax ang given sa problem, kailangan mo pang tanggalin yung tax effects para makumpute natin yung after tax. Then, i-deduct natin yung preferred dividends. Yung preferred dividends, pwede siyang maging cumulative at non-cumulative. If cumulative siya, magdeduct tayo ng dividend whether it is declared or not. Tandaan din na always 1 year dividend lang ang dinededuct. Kapag naman non-cumulative, magdeduct lang tayo only when declared. Then divided by the weighted average number of outstanding shares. Dito, kino-consider natin yung time kung kailan lang na-issue yung mga ordinary shares. Ano nga ba yung outstanding shares? Outstanding shares are those that are entitled to participate in dividends. Outstanding shares are issued shares plus subscribed shares minus treasury shares. So here's an example. ABC Co had the following capital structure during 20x1 and 20x2. The preference shares would be 500,000 and the ordinary shares would be 2 million. ABC reported profit after tax, take note of that, of 1,200,000 for the year ended December 31, 20x2. ABC paid no preferred dividends during 20x1 and paid 15,000 preferred dividends during 20x2. So this problem is an example of a cumulative. So the question would be, what amount should ABC report as basic earnings per share? So we just have to use the formula a while ago in regards to basic earnings per share. So basic earnings per share is equals to net income after tax, which is given 1,200,000 minus 500,000, which is the preferred dividends multiplied by 6% the cumulative, divided by 200,000. So 500,000 multiplied by 6% is 30,000. 1 million minus 30,000 divided by 200,000 is equals to 5.85. Retrospective adjustments. There are cases that unordinary shares are issued without a corresponding change in resources. So the basic and diluted earnings per share and the weighted average number of ordinary shares during the period should be adjusted retrospectively. Here's the examples. Share of stock dividend, bonus element in any other issue, share split or stock split up. Ito yung increase in number of shares with corresponding decrease in par value. And lastly, the reverse share split or stock split down. Kabaligtad na naman siya ng share split. Right issue. When stock rights are issued to shareholders in conformance with their preemptive right, the exercise price is normally less than the fair value of the shares. This type of right issues include a bonus element. Thus, for basic and diluted EPS computation, the number of shares outstanding for all periods before the rights issued is multiplied by the following factor. Take note that the adjustment factor is applied only to the outstanding shares before the exercise date. The formula would be adjustment factor is equals to fair value of stocks immediately before the exercise rights divided by theoretical X rights fair value per share. So, paano nga ba makukompute ang theoretical X rights fair value per share? Here's the alternative way. Fair value of shares selling right on less the value of one right is equals to theoretical X rights fair value per share. Pero paano nga ba natin makukuha ang value of one right? Value of one right is equals to fair value of share right on minus the subscription price divided by the number of rights needed to purchase one share plus one. Here's an example. Entity A has 100,000 ordinary shares outstanding on January 1, 20x1. Entity A offers right issues to its existing shareholders that enable them to acquire one ordinary share at a subscription price of 80 for every 4 rights held. The rights are exercised on April 1, 20x1. The market price of one ordinary share immediately before exercise is 120. Entity A reported profit after tax of 900,000 in 20x1. Here's the solution. Fair value of shares selling right on, which is the given 120, less value of one right, which will be computed as value of one right is equals to 120 minus 80 divided by 4 plus 1. The answer would be 8. So 120 less 8 is equals to 112. So it is the theoretical X rights fair value per share. The adjustment factor would be 120, which is the market price of one ordinary share immediately before exercise, over 112, which is the theoretical X rights fair value per share. So the weighted average number of ordinary shares outstanding is computed as January 1, 100,000, which is the ordinary shares outstanding multiplied by 120 over 112, which is the adjustment factor multiplied by 3 months over 1 year. The answer would be 26,786. April 1, 125,000. Siguro nagtataka kayo saan kinuha yung 125,000. Ito yung outstanding shares after the exercise of rights. So, kinuha muna yung ordinary shares before the exercise of rights, which is 100,000, at inad sa shares issued on the exercise of rights, which is 100,000 rights divided by 4 rights held is equals to 25,000. So, 100,000 plus 25,000 is equals to 125,000 multiplied by 9 over 12. The answer would be 93,750. So, the weighted average number of outstanding ordinary shares is 120,536. From that, makukuha na natin ang basic earnings per share, which is the profit for the year, which is given 900,000 divided by the weighted average number of outstanding shares, which we computed a while ago, which is 120,536. So the basic earnings per share would be 7.47. So the other type of earnings per share is the diluted. When you say diluted earnings per share, this is calculated where potential ordinary shares have been outstanding during the period which would cause EPS to fall if exercised. Tumutukoy ito sa pamamahagi ng mga net earnings ng kumpanya sa mga stockholders batay sa assumption. Ang pagkukompute ng diluted earnings per share ay laging base sa assumptions, laging as if. Pag sinabi natin potential ordinary shares, ito yung financial instrument or other contract that may entitle its holder to ordinary shares. Under potential ordinary shares, meron tayong dalawa, dilutive and anti-dilutive. When you say dilutive, it increases basic loss and decreases basic earnings. Kabaliktaran naman yan ng anti-dilutive, which decreases basic loss and increases basic earnings. So, meron tayong example dito ng potential ordinary share, which is convertible preference shares, convertible bonds, options, warrants, and their equivalent. Later on, we'll have example for each of them. So, ano nga ba ang formula for diluted earnings per share? Diluted EPS is equals to profit or loss plus after-tax interest expense of convertible bonds over weighted average number of outstanding ordinary shares plus incremental shares arising from the assumed conversion or exercise of diluted potential ordinary shares. So here's an example for convertible preference shares. Entity A had the following capital structure during 20x1. Convertible preference shares of 500,000, ordinary shares of 2 million. Each preference share is convertible into 2 ordinary shares. Profit after tax in 20x1 is 1,200,000. So to compute, basic EPS is equals to 1,200,000, which is the profit after tax, minus 500,000, which is the preference shares, multiplied by 6%, which is the cumulative, divided by 200,000, which is the ordinary shares. From that, we'll get 1,200,000 minus 300,000 divided by 200,000 with a total of 5.85. So that is our basic earnings per share. What about the diluted earnings per share? 1,200,000, the profit after tax, plus 0, divided by 200,000, which is the ordinary shares, plus 50,000 multiplied by 2. Bakit natin minultiply by 2? Because the outstanding preference shares, which is 50,000, is convertible into 2 ordinary shares. Ayun, given siya, each preference share convertible into 2 ordinary shares. From that, we'll get 1,200,000 divided by 300,000 is equals to 4. So our diluted EPS would be 4. Another illustration regarding convertible bonds. Entity A had the following instruments outstanding all throughout 20x1. 10% convertible bonds payable issued at face amount 4 million and ordinary shares for 2 million. Profit for the year is 1,200,000. Entity A, income tax rate is 30%. So how do we get the basic EPS? 1,200,000, which is the profit for the year, minus 0, divided by 200,000, which is the ordinary shares. From that, we'll get the basic EPS, 6. Next, for the diluted EPS, 1,200,000, which is the profit for the year, plus 4 million, which is the convertible bonds payable, multiplied by 10%, multiplied by 70%, divided by 200,000, ordinary share, plus 4 million, plus 1,000, multiplied by 30. So, kinuha yun, ito, each 1,000 bond is convertible into 30 ordinary shares. From that, we'll get 1,480,000 divided by 320,000, which is in total to 4.63. So our diluted EPS or diluted earnings per share is 4.63. Last example for options, warrants, and their equivalents. Entity A had the following information for the entire year. Profit after tax for 1 million, outstanding ordinary shares 100,000, employee stock options outstanding during the entire year, option shares 10,000, exercise price 140, fair value of each share option 10, average market price 200, ending market price at year end 300. So the solution for the basic EPS would be 1 million, which is the
profit after tax minus 0 divided by ordinary shares of 100,000.
So, the basic EPS would be 10. So, next, paano naman kinuha ang diluted earnings per share? Option shares, which is given 10,000, multiplied by the total exercise given, which is 150. Paano naging 150 and 140 lang naman yung nasa given? Laging tatandaan na ang total exercise, laging included dyan ang fair value of each share option. At nasa given na merong 10 fair value, so 140 plus 10 is equals to 150. 10,000 times 150 is equals to 1,500,000 divided by the average market price, which is also given 200, which is equal to treasury shares assumed to have been purchased for 7,500. From that, we should get the incremental shares by deducting the treasury shares from the option shares. So 10,000 minus 7,500 is 2,500. From that, makukuha na natin ang diluted EPS. 1 million plus 0 over 100,000 plus 2,500. So from that, we'll get 1 million divided by 102,500 is equals to 9.48, which is our diluted EPS. Contracts that may be settled in ordinary shares or cash. Shares issuable upon the conversion of a mandatory convertible instruments are averaged from the date the contract is entered into. It can be either settlement at the entity's option, which means that if yung isang entity ay may kontrata na pwedeng isettle in ordinary shares or cash, yung entity shall presume na yung contract will be settled in ordinary shares. Kapag yung effect is dilutive, yung incremental shares ay makakasama na sa pag-compute sa diluted earnings per share. Kapag naman yung kontrata is a debt instruments or partly debt and partly equity instruments, yung profit at loss ay kailangang i-adjust for any interest expense na nagamit during the period for the debt component kapag nagko-compute ng diluted earnings per share. Next is the settlement at the holder's option. If an entity has contracts that may be settled in ordinary shares or cash at the holder's option, the more dilutive of the two options shall be used in computing diluted earnings per share. Ang example ng settlement at the holder's option ay yung written put option. Ito yung may ability ang isang tao na magbenta ng stocks ay yung right ay pwedeng ipasa o ibigay sa ibang tao for a specific price. This is a right to sell the underlying but not an obligation to do so. Option represents a right to purchase ordinary shares in accordance with an agreement upon payment of a specified amount including, but not limited to, options granted to and share purchase agreements entered into with employees. Options may be either put options or call options. Put options, ito lang yung kontrata na nagbibigay sa isang holder ng right to sell ng ordinary shares for a specified price and for a specified period of time. While call options, ito naman yung nagbibigay sa isang holder na bumili ng isang ordinary shares sa loob din ng binigay na specified period of time for a specified price. To make it short, when you say put options, it is the right to sell, while call options, it is the right to purchase. Option may be originated as purchase option or written option. When you say purchase option, it is just from the word itself purchase, it is the right to sell or the right to purchase. Next, the written option also from the word itself written, which means that it requires the writer thereof to honor the provisions of the contract if the purchaser exercises its right on the option contract. Presentation. The two earnings per share, the basic and the diluted, are presented with equal prominence on the face of the statement of profit or loss and other comprehensive income. If the entity uses a two-statement presentation as described in Class 1, it presents the EPS only in the separate statement of profit or loss. Always remember that basic and diluted earnings per share are presented even if the amounts are negative. Loss per share. Only the basic loss per share is presented when an entity reports loss for the year. The diluted loss per share is not presented because potential ordinary shares generally decrease the loss per share and therefore are anti-dilutive. An example is when an entity reports loss on discontinued operations. Kapag naman multiple potential ordinary shares, meaning merong 2 or more potential ordinary shares at may mga steps na kailangan sundin. And those steps would be to test for dilution. Paano nga ba tinetest ang dilution? Required na i-compute ang basic earning per share. Step 2, rank potential ordinary shares. So, kailangan muna natin siyang i-rank. Ang magiging highest priority or highest rank ay ang potential ordinary share na may lowest effect to the basic earning per share. Meaning, kung ano yung pinakamababa na nakuha natin doon sa test 1 ay yun yung may highest rank. Test for dilution. Number 1, options and warrants. Dilutive siya kapag mas mababa ang exercise price kaysa sa average market price. Sa convertible bonds or convertible preference shares naman, malalaman na dilutive siya kapag yung assumed conversion ay hindi nag-i-increase ng diluted earning preference shares at hindi nag-decrease ng diluted loss per share. So, for computation of the convertible bonds, incremental EPS is equals to after-tax interest expense divided by incremental shares from assumed conversion of convertible bonds. For computing the preference shares naman, incremental EPS is equals to preferred dividend of convertible preference shares divided by incremental shares from assumed conversion of convertible EPS. Dun sa ranking, kapag dilutive ang warrants at options, mapupunta agad siya sa number 1. They are usually regarded as the most dilutive because they result to no incremental earning per share. Meaning, kapag dilutive ang warrants at options, automatic siyang number 1. Next, for number 2 and 3 will be either preference shares or bonds payable. Dito naman, kailangan munang malaman kung ano ang dapat unahin sa kanila. Contingently issuable shares. Contingently issuable shares. These are ordinary shares issuable for little or no cash or other consideration upon the satisfaction of specified conditions in a contingent share agreement. Next is contingent issuable shares. Ito yung shares na may kasamang contingency, meaning bago mo ma-issue ang share ay contingent pa siya sa outcome ng isang future event. Partly paid shares. Partly paid shares are treated as fractional shares to the extent of their participation in dividends. For diluted EPS computation, the incremental shares from shares that are partly outstanding are determined using treasury share method. Ano nga ba yung treasury share method? Ito yung ina-assume na lahat ng options at warrants ay issued at the exercise price and subsequently reacquired at the market value.